Trump's victory affected the financial markets.
After Trump's victory, there are certain impacts in US financial market economy. Firstly, their bond investments are affected because of the uncertain risk and his new policy in which it affects the bond price to decrease, meanwhile increase the bond yield. Next, he has also raised expenditure on defense and infrastructure, leading to increase in jobs and employment rate. Not only that, he even pledged to improve their economic by encouraging US export and limiting foreign import, leading to an increase in stock market. Lastly, due to his business approach plan, it increased the US dollar exchange rate, but it can also be a disadvantage because their export will be affected and it would be expensive for foreigners to buy from them rather than their own manufacturer.
The interconnectedness of the US and Malaysia's financial markets can be seen through September 11 that Malaysia was affected by the federal cut rates in the US as the KLCI fell by 80 basis points. Furthermore, the study conducted on the Asian financial crisis showed that there is an interconnectedness between Malaysia, the US and Japan due to trade relations and to a certain extent geographical distance. The 07-08 financial crisis in the US had caused the market to crash there, caused an aftershock in the KLCI. Similarly, it had an effect on our exchange rates and Malaysia suffered, as shown in the graph to the right. Lastly, it is found in the study that Malaysia's inflation rate is positively correlated with the US and it reflects the nature of our financial markets.
Trump's victory affected financial markets significantly.
After Trump's victory,
Trump's promises in infrastructure investment and tax cuts drove US interest rates to the highest in 2016. 10-year bonds jumped from 1.8% to 2.7%. Investors then derive higher returns with relatively safe US bonds. Thus, the demand for Malaysia's bonds dipped, making it difficult for Malaysia to borrow. Also,
US withdrawal from the Trans-Pacific Partnership directly implies a loss of potential gains to a certain extent, hence lowering investors' confidence in the booming of our economy, decreasing the investors' demands in Malaysia's market like oil and gas.
Moreover, after setting America First policy to lower imports, increase domestic production and impose tariffs on imports, Malaysia's currency hit the lowest in 19 years, touching 4.49 ringgit per US dollar. Thus, due to the uncertainties about Trump's administration and policies, investors deem it too risky to invest and subsequently caused capital outflows from Malaysian bonds and equities. Furthermore,
Trump has room to increase tariff or impose other import restrictions so as to deal with current account deficits, unfair trade practices, national security threats, national emergencies and war. Basically, the introduction of border adjustment tax indicates that there would be a tax on imports going into US as well as a subsidy on US exports.
Lastly, protectionism against China rose due to the high trade deficit. However, tariffs imposed upon China may provide Malaysia the chance to step up and supply those products to US. Malaysia could then ramp up their direct exports to US, substituting China. Finally, the impact of Donald Trump's presidency on Malaysian financial markets.
The first disadvantage would be the spillover effect. Due to Trump's projected increase in tariffs, US demand is projected to fall and disrupt trades between Malaysia and US, which decreases income from the US and causes the net capital investment in Malaysia to fall. Next, exports to US will also decrease due to Trump's executive order focusing on buy and hire American. Malaysian firms will have to cut down on production and decrease investments, and this will dwindle the size of Malaysian capital markets. With the US dollar strengthening, domestic consumption in Malaysia will fall, leading to a short-term disadvantage. However, in the long term, foreign companies will tend to invest in Malaysia, which will in theory improve our financial markets. Since the US withdrew from the TPPA, in the short term, Malaysian trades will first suffer. However, in the long run, this will encourage domestic consumption in Malaysia, encouraging economic growth and improving trade flows. And if TPPA finally ceases to exist, Malaysians can also participate in the RCEP, another intra-regional trading cooperation. Nandri.